What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 11th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to start off the week by talking about the big sell-off we saw in Bitcoin's price over the last 24 hours, dropping from around 44,000 down towards around 40,500, a near 9 to 10% pullback in Bitcoin's price. So I want to spend some time to talk about what might have caused this, but more importantly, try to answer whether or not this really is a meaningful trend shift in Bitcoin's price. And you guys may be surprised by the answer I give on this topic. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So I want to start here by focusing in on that big question here, whether or not this is a big deal. You know, it does sound like a huge drop here, Bitcoin dropping a couple $1,000s, practically flash crashing here in the short term, as many people are calling it. But I'm going to go ahead and let you guys know my genuine thoughts on this. Now, many of you know we've been generally of the idea that this is a relief rally going into this ETF announcement. We do believe that Bitcoin will top out. It'll be a buy the hype, sell the news event. And in the meantime, our real focus is on altcoins if there are any opportunities in the short term. That being realized, as much as I would definitely love to leap on an opportunity to talk about Bitcoin's price going down and say that it's a validation for Bitcoin's price moving down over the longer term, I'm going to be fair and honest with you guys here. I'm not someone who's totally biased to my own viewpoint. If you just simply take a look here at the 4-hour time frame, we can see that the 21-day EMA is exactly where buyers came in. That to me looks bullish. Like, that's a good thing to see here. And ever since back when we had that break above the $30,000 range, where there was that 32K range of resistance, as we talked about on the channel, guys, we got that wrong. We thought that that was going to be resistance. And since then, Bitcoin has been holding on one of our more optimistic indicators, the golden pocket, the 21-day EMA and the 21-day SMA. So that 9 to 10% pullback, which sounds so disastrous, is just pulling back here to this range, right? So until I see a break like that, I wouldn't really consider shorting Bitcoin. I wouldn't say that the trend is over. We still have a couple weeks until January, but it may be that the broader move of Bitcoin is absolutely in. I can agree with that the overwhelming majority of the gains you'd make on Bitcoin are already priced in, and they're nowhere near what you could be making in altcoin markets. That's my big point I've been trying to echo in this channel. But if you just take a look here, basically just cut back about a week's worth of gains back to December 4th. So that's not something for me to get really finicky or panicky about when it comes to Bitcoin's price. And I don't think it's a confirmation of a trend shift just yet. We need to see the 21-day EMA being broken, where price is struggling to get back above it and is looking to potentially come down towards some of these other further extended moving averages, like the 200-day pocket or the 200-week pocket down here between 26 and 29K and 30 to 31K. I have to be honest with you guys here. I really see that happening in January, and it's probably going to be at a slightly higher price as these moving averages are slowly moving up. So somewhere in this ballpark here, practically where we had previous resistance, probably around 32, 33K, might be where you'd look for that dip buying opportunity post the ETF launch. Again, a lot of the price benefit for Bitcoin is coming now in the seeding and pre-purchasing and anticipation of the ETF, not when institutions are going to go buy the ETF itself. I want to echo that again, just so you guys understand that. But again, I hope this showcases here that I'm trying to be as fair as possible. And more than anything, what I'm looking at is whether or not this is a buy the dip opportunity on market leaders in the altcoin space. Because if we can nail a right move here in the altcoin space, we will have outpaced Bitcoin for the last year in its price performance and possibly make even more and greater phenomenal returns if we play our cards right. We can see that total market cap across the entire crypto space from top to bottom here cut out about $150 billion in market cap. It depends if you get these specific numbers, but generally speaking, around $100 billion plus correction here in total. We can see in total 3, more specifically in the altcoin space, that so far we've cut back around, if we take it from again top to bottom, right under 470 billion, down here towards 430, so about a $40 billion wipe in market cap. But again, we've recovered a little bit here. What I'm waiting for is that retest of the 21-day EMA. I think altcoins have got a little bit more room to cool off, give up about a week and a half, in this case, it'd just be about a week's worth of gains here, come into that pocket around 425. And for me, I might be looking at some strong leader plays there, set some good risk reward setups where, again, I'm going to have a moderate stop loss in that case to protect myself. But I think, again, there's the good favorable risk reward setup in the market. And the EXBS index, which tracks Ethereum, XRP, BNB, and Sol, these names cut back from around right under 400 billion down towards 350 billion. So about a $50 billion pullback between these names respectively. And again, buyers came in there at that 21-day EMA pocket, golden pocket we're looking for here. So I want to see, again, more retest of that range, and I want to see that we're starting to set in higher lows and higher highs, right, during that accumulation range, just like we did back here. And that for me can be the signal to potentially ride higher. Now again, last 24 hours was definitely difficult on the altcoin market, but many of these names are generally up here over the last 7 days. So again, I'm not going to sell it here that, oh, it's absolutely terrible and disastrous. There are plenty of names here who on a 7-day basis, though, still have been weak. And this is my point here about chasing market leaders. We want to chase the names that have strong narratives, that are taking ahead of the leaderboard. We don't want to buy names that are just solely at a discount. And again, as you go down the list here, you can just see that there are a lot of the plays we've been talking about, like Ordi in this case, which even has gone through a pretty heavy correction here in the past 24 hours. We're looking to see what it's going to do when it comes to that 21-day EMA pocket, and outside of that as well, Stacks. So these names had already been up phenomenally, but they're also holding up here. We saw a lot of boost for different protocols like Avalanche, we saw Cardano, and also as well, we saw Polkadot stealing the stage here over the last, kind of 48, 72 hours, but a lot of pullbacks here in altcoins. Now, I want to go ahead and try to provide a genuine answer here. I know a lot of people are wondering, okay, but Nick, isn't there a reason for this pullback here? What really caused this? Is there any cause for concern? Well, I think there are a couple things here, guys. First off, markets get ahead of themselves. This guy, Crypto Rover, put out a really interesting chart here tracking the liquidation heat map from CoinGlass. CoinGlass is a really cool provider in the crypto space, have a lot of interesting metrics. But he shared, I think, a really relevant chart here, which is trying to track essentially through the overall measurement of Bitcoin's price, where there are some liquidation hot zones, places where if Bitcoin's price were to reach that range, a lot of people get knocked out of futures or derivatives positions on Bitcoin's price. And I've echoed on this channel for the longest time as we've spoken out against leverage trading, that exchanges en masse, and you can't really blame them at the end of the day, in a thin market like Bitcoin is at the moment, it's very thinly traded, there's not much deep liquidity on the order books. Because of this, and both to the upside or downside, Bitcoin's price can move in dramatic fashion very quickly off of very little buy or sell side pressure. And there is an incentive for exchanges, and this happens in Forex markets, it happens in practically every market, whether it's stop hunting, whether it's getting liquidated and having a margin call, irrespective of which direction, which method, exchanges have the ultimate incentive to get you liquidated, okay? Doesn't matter how great the exchange is, there are many out there that are going to pursue it, and they, in many ways, can lead towards dramatic swings in Bitcoin's price. So my point here is that, as he was echoing here within the post, there's about a $5 billion Bitcoin long set of liquidations that would get hit around this range at 33K. That's why we do believe that irrespective of it's now or after the Bitcoin ETF launch in January, that's probably going to be the target range you're going to look for price to correct down to. So it may very well be that not only the majority of the returns are in, but if you're looking to get into Bitcoin and you do believe that this is a new bull market, or you believe that Bitcoin can go to new all-time highs, whatever it is, be cautious here. Wait a little while. This is like kind of I would say the biggest micro topic here, because liquidations and liquidation levels are a huge part of crypto markets. But outside of that as well, we got to talk about what's going on across a variety of asset markets. I want to take a step back in the macro here and talk about what's going on within gold, what's going on in currency markets, and global liquidity. Because I know a lot of people, when it's very easy, when crypto starts taking off, everyone gets back and focusing on the micro, and they don't observe what's going on in the macro, because all of what's going on in crypto just seems so exciting. And it is, it's true. But I have to tell you guys, if you're ignoring what's going on in the macro here, you could very well be getting caught in a trap. And we're going to bring it back to crypto in a moment. You can see here, gold had its biggest weekly rejection out of all of the prior attempts to break past the $2,100 level. We got to the highest level here technically for gold at 2147 off of some FOMO and buying here on Monday of last week in December 4th. But we faded all of those gains. Take a look here on the daily and tell me if this looks good to you guys. This tells me that someone is still distributing a massive position in gold around this range. And irrespective of whether or not, we eventually squeeze, higher over the next couple of years, in the near term, it's signaling that people are opting in. Some massive, player in the space is unloading a large gold position in favor of dollars when we get to this range. So that doesn't bode very well. And the fact is, again, like we talked about crypto, in the other fashion here, we're not holding at the 21-day EMA. We're holding at more of the longer term ones, like the 200-day and the 200-week. So this, again, is not indicative of a confident trend. It's not indicative of an uptrend and confidence from continued buyers coming to the market. More than anything, it's a sign of continued sell-side pressure outweighing market buy-side pressure. Outside of that as well, we also have the Dixie. I know a lot of people pointed out, oh, hey, Nick, you keep talking about the dollar remaining relatively strong. Well, the Dixie is pulling back. What do you say to that? Well, I would say here that, again, while I do believe, and we actually wrote in the Dash report this past month, that we believe the dollar has probably seen some of its best gains. It's definitely not going to new all-time highs, and we've been of that, kind of idea for a long period of time. The main point I want to say here is that the Dixie is still pretty resilient here. It's hanging around the 200-day. It deviated back up here, and it's trying to see whether or not it can get substantially above that 21-day EMA. And if it does, just like it did back here or in any of its prior relief rallies, it's holding relatively strong and usually will continue up a couple points before potentially moving back down or holding sideways. And the reason for this here, I think, is that people are really getting out of touch. They're getting out of touch with the fundamentals, guys. People believe that the Fed and other central banks across the world are printing en masse. And I don't think that that's true. I understand there are really two narratives here, that either in order to deal with the federal deficit that we have in the United States and in order to get out of this debt bubble we're in, there's one of two paths. Either we, essentially restructure debt and go through the painful process of defaulting to some degree or having a minor default, and you go through and you restructure debt and what's owed in the world, or you go through the second path, which is printing your way out, right? That's what a lot of people feel, is inflating and printing your way out is going to be the path forward. But I have to tell you guys, irrespective of what path you think it's going to be, the resilience in the dollar, the resilience in oil at the 200 week, but more importantly, global liquidity. These are the signs that tell me easy times may not be here like people are expecting. I'm not here to say that Bitcoin couldn't be that asymmetric asset. We've talked like that 10 to 20% probability that Bitcoin could be, replacing the position of gold as this asymmetric high growth asset in an inflationary environment, in a monetary debasement environment, whatever it might be. But I have to tell you guys here, right now we're not seeing monetary debasement. We are seeing inflation. We're not seeing monetary debasement. And you've heard me probably echo this point before if you guys watch this channel religiously. If we're not seeing monetary debasement, I have a strong feeling Bitcoin is not going to do well, because this means that dollars and other currencies are becoming more scarce. Liquidity is becoming scarce. And liquidity has been historically incredibly significant to Bitcoin, to stocks, to real estate, practically any asset going up in value. Because as you debase the money supply, as there's more dollars in circulation, that will flow into other financial assets. It's got to find a home, right? People have got to find a way to hedge against that monetary debasement. And there's only so many assets out there in the world, whereas money can be infinite. But even considering that money can be infinite doesn't mean that it's always going up. And it hasn't been going up since back in February 2022. A lot of people got sidelined from September 2022 here to April 2023 by the fact that, hey, liquidity is starting to trend up higher again. But afterwards, it corrected down to new lows. Yet again, as the Treasury General account has been expanding, you have a lot of people out there in the crypto space. You even have people like Arthur Hayes, who, again, I can respect to a degree on his market analysis, even though I may disagree to some extent on his broader expectations. You can see here we're setting in new lows on global liquidity. The Fed is still on autopilot reducing its balance sheet by tens of billions of dollars every month, with no signs of changing that. And markets, I think, have gotten way too aggressive in expecting that the Fed is going to cut tens, if not hundreds of basis points, or essentially 1-2% from the Fed funds rate over the next year. I don't feel in any capacity that could really happen. And again, it's in a similar fashion to how markets can get overly hawkish sometimes. They can get overly optimistic. I think people are again chasing this tail, this idea that we've completely got out of the hole. Yeah, some things in the fundamental part of the economy, the actual fundamentals of economic activity, of credit. Even though consumers are taking out credit cards at their highest rates in history and at historically high interest rates, everything's just going to be okay. Everything's just good. Inflation, it's going to be normal now, 3 or 4%. That may not be what really happens. And it may not be that Bitcoin survives or does very well. I mean, it definitely will survive. I don't mean to be melodramatic. What I mean here is that it's not going to possibly thrive in an environment where liquidity is still on the decline and may even snap through this range and decline all the way down to where it was back in 2020 in order to really combat inflation, or somewhere in this ballpark. That could be another couple $1 trillion removed from global liquidity. And that will likely lead towards a correction in value. In the same way the global liquidity increasing can cause valuations of assets to increase, it can have the counter effect when it's removed from circulation. The only thing I would say here that I wanted to kind of emphasize here around Bitcoin's dip like this is the speed at which it happened. Having a 9% correction like this, in nominal terms, this was the biggest correction really since back here. I mean, it was actually even bigger technically than the one back here in August of 2023. The main point I would want to echo is when you see these types of corrections that happen swiftly, we have big red candles, that can be indicative of, at least at a minimum, a cool down, a pullback towards a more rational and normalized valuation. And also, it's a great opportunity, even if you're bullish, to, for example, make something like the 200-day, which is still rising. By the time price makes contact with it, it'll probably be, no lower than, like, say 34, 33K, whatever, to turn this prior range of year-long resistance, right, around 30K, into new support. And so what? Take it from up here, you come to that range, talking about a 25, 30% discount in Bitcoin's price. Great buy the dip opportunity, or maybe the start of an indicative long-term trend. Either way, irrespective of where you stand, for me personally as a trader, I would see that pullback. I get in on altcoins, maybe consider some Bitcoin allocation, but most importantly, I have my risk profile set up. I have my target take profit levels, and I have my stop loss in case I might get it wrong. There's all kinds of ways you can approach it. It's about making sure that you have those buy the dip opportunities, or at least a discount opportunity at play, rather than just FOMOing into the trend. And outside of that, having a good risk reward setup. So there are a couple different ways you guys can approach this, again, irrespective of what happens with global liquidity, irrespective of what happens in equity markets as well, which are still holding relatively strong here. They're playing on par with their 21-day EMAs. Irrespective of what happens with the altcoin market, we generally want to make sure that we're entering in on a good discount opportunity. It gives us a better risk reward profile. And so long as those buy the dip opportunities are on the same consistent indicators that signify to us that, hey, the market is still ready for higher prices. It hasn't had enough. The FOMO, the exuberance is still there, and it can come roaring back here in the next couple days, weeks, and months. If that is what's still signaling a price, then we ride it. But I want you guys to understand very clearly here that while I'm happy to trade on altcoins on the trend here, I really, if you're asking me about whether or not to build a long-term Bitcoin position here, we've never been opposed to having some fractional exposure, but yes, we've been in mainly cash this year, guys, and we feel that that's probably still going to be the best position if you're talking about a year, 2-year time horizon. That's just where we sit right now, guys. The yield curve is still heavily inverted. And once that starts to uninvert, which is likely going to be here in the next year, it's going to be a rough period. Bitcoin's never been through that. But it's more likely than not that as a risk-on asset, as much as we'd like to see it as risk-off, Bitcoin and crypto are risk-on assets in the eyes of most investors. And unless that changes anytime soon, we need to continue respecting that fact and probably make sure we adjust our trading strategy so that we're not so risk-on during a generally risk-off period of the next year. Anyways, either way, we're going to trade with the charts here. We're keeping in our fundamental long-term macro perspective. But at the end of the day, there are going to be trading opportunities in the short term in the altcoin space. We'll continue to trade those when they come. But right now, we still remain in cash and we remain resilient here to see what happens with Bitcoin's price. So I hope this provided some context for you guys here. I know many people are looking for a reason for why price drops. Markets are markets. And people get over leveraged sometimes, they get liquidated. But also I think the fundamental picture here is that global liquidity is still significantly on the decline over the long run with lower highs and lower lows. Now, there is one thing I wanted to talk to you guys a little bit about here, and it's the key factor around taxes when it comes to trading and investing in crypto. I know a lot of people here are maybe just doing some short-term trading opportunities like ourselves in altcoins. Some of you believe that we're going to new all-time highs in Bitcoin and the altcoin space. And irrespective of where you stand, I think it's important and imperative above all that you make sure that you have a proper tax strategy towards investing in cryptocurrencies and you maximize the available legal paths to limit your tax liability when it comes to investing. And that's why I want to spend some time to talk about iTrust Capital, our partner here in the channel. iTrust Capital not only allows you to buy and sell crypto as well as precious metals like gold and silver, but it allows you to do so in an individual retirement account or IRA. If you're in the United States, this is highly relevant for you because an IRA is one of the best paths you can take towards planning for retirement. It's a tax advantage account where on an annual basis, you're not paying any taxes on your trades or investments whenever you make gains, and only have to pay taxes when you actually want to close or cash out the account towards retirement. So it's a really powerful way to start planning for retirement, and you can invest in practically any of the major cryptocurrencies that you could think of. They have a whole range of altcoins as well as the leading plays like Bitcoin and Ethereum by market capitalization. So if you guys are interested, check out the link down below in the description where you guys can sign up for an account, and you'll get $100 for signing up and completing the onboarding process of either migrating an existing IRA or creating a new one. So I recommend you guys check that out and consider maybe putting some allocation towards it. Again, definitely talk to a financial advisor, but I think at the end of the day, it's something definitely worth considering. Thank you guys so much for tuning in. As always, it's great having you guys here and diving in through the data. I'm excited to continue seeing what happens here over the next couple days. So if you again enjoyed this video, consider dropping a like, and I'll see you guys right back here on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone. I'll talk to y'all soon.